Welcome back to Investing Talk Podcast. We're here today to give you a really clear, structured look at upcoming earnings, specifically for Quantum Corp. We'll be breaking down those crucial details you need from the pre-earnings analysis, helping you navigate all the information out there.
Sounds good. Quantum Core is definitely an interesting one right now, facing some significant challenges.
Absolutely. And their upcoming report feels, pretty critical. Before we dive in, though, if you find value in what we do here, please take a moment to subscribe, like, and comment. Your support genuinely helps us keep these insights coming. Also, if there's a specific company you'd like us to look into for a future session, just leave a comment below. We always appreciate hearing from you. And if you're feeling extra generous, consider buying us a coffee to fuel these explorations.
Okay, let's unpack this for Quantum Corp. We're talking about a company, like you said, facing real challenges. And this earnings report is a key moment. Our goal is to highlight what's most important and, what to watch out for.
Right. Let's lay out the groundwork first. First things first, the essential details. When are they actually reporting?
Okay, so Quantum Corp is set to report its earnings on Monday, June 30, 2025. And that's after market close.
Monday after the close. Got it. And the conference call, is that right after or?
No, actually. What's interesting here is that the conference call isn't until Thursday, July 3, 2025 at 8:30 a.m. Eastern Time.
Oh, wow. So there's a bit of a gap.
Yeah, a couple of days. Gives the market some time to, digest the initial numbers before management actually speaks.
Interesting timing. So when we look at analyst expectations, what are we seeing? What's the consensus?
The consensus estimate for Q4 FY25 is looking like a loss of negative 15 cents per share.
Okay, negative 15 cents.
Right. And what's also notable is that specific revenue consensus wasn't widely available in public sources, and there wasn't a published whisper number either.
Which suggests?
It suggests the market is really laser-focused on that bottom line, that negative 15 EPS figure. Profitability, or the lack thereof, seems to be the main event here.
Right. Makes sense given the context. So what does this all mean in terms of what the company itself has been signaling? Have they given any recent guidance?
Well, management hasn't publicly reiterated explicit quarterly guidance in recent press releases. Their last commentary really highlighted the continued restructuring and this ongoing turnaround effort, especially with the new CEO, Hughes Merath, now at the helm.
Ah, the new CEO. That's a big factor.
Exactly. And it raises an important question. Will this report finally offer more clarity on that turnaround? That's what people are waiting for.
Clarity is the key. Okay, to understand what might happen next, we really need to look back. How has Quantum Corp performed historically against expectations?
Yeah, looking at the track record is pretty telling. If we connect this to the bigger picture, the historical trend shows frequent negative surprises. In the last 4 quarters, EPS has persistently fallen short of consensus.
Consistently?
Yeah. For example, in Q3 FY25, they reported actual EPS of $80.81. The consensus was $80.70, so they missed by $1.11. And similarly, Q2 FY25 saw an actual EPS of 96 cents against an $80.88 consensus. So yeah, a pattern.
That's a pretty consistent pattern of misses. And how has the stock price typically reacted to these disappointments?
Well, market chameleon records indicate that the post-earnings price reactions have generally been negative following a miss.
As you'd expect, I suppose.
Right, and often with notable volatility. We've seen gaps to the downside, and interestingly, those initial moves have tended to extend lower in the days after the report.
So the pain lingers a bit.
It seems so. Suggests the market needs more than just one data point to be convinced things are turning around after a miss.
Makes sense. What about the company's underlying financial health beyond just the headline EPS number? What are the key metrics showing?
Well, the key metric trends aren't great, frankly. We're seeing declining revenues year over year, persistent operating losses, and of course the negative EPS each quarter we just talked about. Gross margins have also been really challenged.
Why is that?
It seems to be a mix of things. Pricing pressures in the market, cost structure issues within the company, and also some complex transitions in their legacy contracts.
Okay, so internal and external pressures on margins.
Exactly. It's not an easy fix.
All right, let's shift gears a bit and consider what's been happening specifically during this most recent quarter. Were there any significant company-specific catalysts?
Well, the big one, as we mentioned, is the appointment of the new CEO, Hughes Merath. That was announced on June 18th, 2025.
Right, mid-June, so late in the quarter.
Yeah, a pretty significant leadership change during the quarter itself. Beyond that, the company's been publicly focused on the operational turnaround and streamlining costs through that ongoing restructuring.
Any big product news or deals?
Not really. There weren't any major new product launches or material partnerships disclosed that stood out. So the CEO change and the restructuring are really the primary internal stories for this period.
Got it. And what about the broader industry and macroeconomic environment? Any tailwinds helping them out, or is it mostly headwinds?
Yeah. It's mostly headwinds, unfortunately. Storage hardware and enterprise IT spending generally have faced challenges.
Okay.
You've seen macroeconomic caution, delayed customer purchasing cycles impacting the sector.
So companies holding back on spending.
Precisely. And then there's the continued competitive pressure, especially from cloud storage services.
Always a factor in this space.
Always. Now, on the plus side, supply chain normalization has mostly progressed, but pricing still remains intensely competitive across the industry.
So, tough environment overall. Has this context influenced analyst sentiment lately? Any upgrades or downgrades?
No prominent new analyst upgrades or downgrades were found in the quarter, actually.
Quiet on that front.
Yeah, but the consensus EPS has been drifting a bit more negative over time,
Okay.
which suggests, a general skepticism around a rapid recovery for Quantum Core despite the new leadership.
So, analysts are kind of in wait-and-see mode, leaning cautious.
That seems to be the sense, yeah.
Now, let's look at the stock itself, right before this report. What does the technical setup tell us? How's the stock been behaving?
Okay, so the stock closed at $7.75 on August 22, 2025. And that showed a pretty significant jump, plus 10.24% from the prior session.
Whoa, a 10% jump? That's noticeable right before earnings.
It is. It could suggest some pre-earnings speculation, maybe some short covering.
Or maybe optimism about the new CEO?
Possibly. But it's important to note there's no evidence of a sustained pre-earnings run-up over several sessions.
Okay, so maybe more of a one-off?
It might be. This recent move could be an isolated sort of event-driven blip rather than a building trend. You need to be a bit careful reading too much into one day.
Good point. Given the history of volatility we talked about, what is the options market pricing in for a post-earnings move? What kind of swing are traders expecting?
This raises an important question for market expectations, right? The options market typically prices in, a double-digit percentage move for Quantum Core.
Double digits, okay.
Yeah. Historically, looking at past earnings moves suggests the market could be expecting something in the range of, say, 12% to 18% swing after the report.
Wow, 12 to 18% either way. That's a huge potential move.
It really is. It indicates very high anticipated volatility. The market is bracing for a significant reaction.
Okay. Bracing for impact indeed. With all this in mind, the history, the new CEO, the headwinds, the options pricing, let's think about the possible outcomes. What would a bullish scenario look like for Quantum Core's earnings? What they need to deliver?
Right, the bullish case. Look, a strong beat and raise would be ideal, obviously. But even just a solid beat on that EPS number would be a start.
Better than many $2.15, significantly so.
Exactly. A return to positive EPS would be huge, but even a meaningful narrower loss would be seen positively. We'd also need to see revenue stabilizing, stopping the decline.
And margins.
Yes, and decisive improvement in gross margins. That's critical. Positive commentary on the turnaround, maybe some early customer wins or new signings under MARAF that would really help build credibility.
And guidance.
Crucially, yes, fiscal 2026 guidance that indicates a clear path back to profitability. Not just vague hopes, but a credible plan. That could drive significant short-term upside.
A lot needs to go right for that scenario.
It does.
So on the flip side, what would spell a bearish outcome? What confirms the market skepticism?
Well, the bearish case involves continued EPS misses, especially a larger loss than that -$1.15 consensus.
Deepening the hole.
Right. Further revenue declines instead of stabilization or any negative commentary around order delays or maybe customer attrition.
Losing customers would be bad.
Very bad. Also, weak cash flow generation, evidence that the restructuring is just dragging on without real benefits, or simply a lack of any updated forward guidance that would also be red flags.
Any other potential pitfalls?
Yeah, any larger than expected charges or impairments related to the restructuring or assets could really spook investors and provoke heavy selling.
Okay, so a lot rests on execution and clear communication. So what's the single most important metric for investors to watch, beyond that headline EPS number, given everything we've discussed?
Good question. Given the persistent EPS misses and the turnaround situation, I think investors will be keenly focused on the free cash flow trajectory.
Free cash flow, why that specifically?
Because it cuts through some of the accounting noise. It's a critical signal of whether the turnaround efforts are actually stemming the cash burn. Is the business really improving operationally beyond just the reported losses? That's what FCF can tell you.
Right. Is the core business generating cash or still bleeding it?
Exactly. It's a real litmus test for the turnaround's effectiveness.
Okay, pulling all these threads together then, the history, the context, the metrics, there's our overall leaning for Quantum Core's upcoming report. Bullish, bearish, neutral.
Based on our analysis, our leaning is neutral to bearish.
Neutral to bearish, okay.
Right.
Why?
It's primarily due to that negative earnings momentum we saw, the sort of skeptical analyst trend, and frankly, a lack of clear positive catalysts or strong guidance leading into this report specifically. Plus, the sector headwinds are real.
Makes sense. And what's our confidence level on that leaning? On a scale of 1 to 10, how sure are we feeling about that neutral to bearish stance?
On a 1 to 10 scale, I'd place the confidence score at maybe a 4.
A 4. So leaning that way, but not overwhelmingly confident.
Exactly. There's
Yes.
strong recent evidence of earnings underperformance, and the sector backdrop isn't helping. But the introduction of a new CEO and those ongoing operational resets do add some uncertainty.
The new leader wild card.
Right. It makes it not entirely clear-cut. There's always a chance for a surprise, positive or negative, especially with new management setting the tone.
Okay, a 4 out of 10 confidence, leaning neutral to bearish. For our listeners who might be considering their options here, what are some trading strategy considerations based on this outlook, keeping in mind that high volatility?
Sure. Look, for the risk-averse investor, it's probably advisable to just avoid holding through earnings. The unpredictability and the high volatility risk, based on history, seem significant.
Sit this one out.
Pretty much. Now, for those who are more risk-tolerant, you might consider strategies designed for high volatility, like a straddle or a strangle. These aim to profit from a large move, regardless of direction.
Betting on the big swing itself.
Correct. And this is a big and a bearish read. But it's crucial to remember that the directional risk seems skewed to the downside, given the recent surprises and the technical setup.
So, while a big move is expected, history suggests a negative move is maybe more likely after a miss.
That's the historical pattern, yes. Furthermore, given that sharp, recent plus 10% jump in the stock price, short-term traders should be especially cautious of a potential reversal if the report does disappoint again. That pre-earnings pop could vanish quickly.
Good warning. That pot might be built on hope rather than fundamentals.
Could be. It adds another layer of risk.
Absolutely. Well, understanding these nuances before an earnings report really does empower you, the listener, to make more informed decisions, whether you're invested or just watching.
And this really raises a fascinating broader question for any company in a turnaround situation like this, doesn't it?
Which is?
Can new leadership truly reset expectations and the financial trajectory when they're facing such persistent industry headwinds and, a history of missing estimates? Or is the market already too anchored in skepticism to really buy into a quick recovery narrative?
That's the million-dollar question, isn't it? The balance between hope in new leadership and the weight of past performance and current challenges. Well, thank you for joining us today for this comprehensive look at Quantum Core's upcoming earnings. We really hope this analysis provides you with valuable insights.